So I know Silver
Yeah,
was using the aircraft and the challenges that they faced there. So it does seem like a logical fit, doesn't it? But
it definitely does. It definitely does.
challenge.
But I think there is a bit more market demand in the US for jet aircraft. We have seen the smaller regional jets in the 50-seater market doing quite well for the past years. But it definitely seems that the ATR will be a very good candidate on the short routes. However, we do have the speed aspect with it being lower, slightly lower thrust than from the older generation Q400, for example. But we'll have to wait and see. Hopefully, that the market sees the opportunities offered by ADR. Moving on into the financing environment, regional sector, we did go through a couple of years of high interest rates from the central banks, something that did affect financing quite a bit. However, with the rates dropping and stability looking forward, we have seen sources of financing have changed. We did see investor appetite in the capital markets over the past 2 years dwindle as investors became quite risk averse due to the volatility, especially following the pandemic. But this is looking to come back, and we do expect more activity in the sector, whether that be ABS or unsecured bonds. We did see Zora, a large regional store, raise capital for the issuance of unsecured notes recently. And in general, if there is availability of aircraft to finance and investor appetite for B and C tranches as well as equity notes, we do definitely see the ABS structures coming back in 2025 and the following years. However, with the regional sector being quite a niche market, we do see the use of less leverage across the board, especially compared to what we might be seeing in the narrow body sector. The regional aircraft do have a smaller operator pool and limited resource specializing in the space, as less trading with each other, and they are deemed to have a different risk profile, and that creates a slightly higher lease rate factor, which obviously leads to a higher cash flow. This doesn't allow the industry to better fit into bank money. We did see Junior, for example, 2 days ago, they had a term facility from BNLB that was development as well, reaffirming this point. So we do see less alternative lenders in the regional space than we might be seeing in the narrow body market. Moving on into M&A, we did have some questions in the previous webinar about Falco sale to HBS and the announced sale of NAC to DAE. So in terms of investors entering the market and consolidation, we have seen some trends. There has been an increasing interest from large asset managers, hedge funds, and private equity into the regional sector. And we've seen, they've seen the healthy rebound of the market due to higher risk and better returns in terms of cash flow. We do find the regional aviation sector as a good candidate to achieve the satisfactory returns they are usually after, especially when you compare to the narrow body sector, which is slightly tighter market. So when looking at the M&A within the industry, it's evident that scale is important, especially in the regional sector where in general there are lower value assets. So M&A is something that will help. And we've seen that consolidation in the industry is rampant throughout its history, and investors, institutional investors, mostly do profits from consolidation, something which is quite necessary. And we've also seen that sometimes acquiring growth is preferred over